So good day everyone. My topic is all about life or health insurance and other non-life insurance premiums or similar amounts in exist of what the law allows. These are taxable fringe benefits except the following insurance or premium contributions allowed to required by law. So number one is contribution of the employer for the benefit of the employee pursuant to the provisions of existing laws such as contribution of SSS, GSIS, PhilHealth, and HDMF. Number two is cost of premium for group insurance of employees. So, taxable fringe benefits include life or health insurance and other non-life insurance premiums that exceed the limit set by the law. So, however, certain insurance contributions are exempt from taxation, such as employer contributions to government programs like SSS, GSIS, PhilHealth, and HDMF, as well as the cost of premiums for group insurance covering employees. These exemptions are provided for under existing laws to ensure that employees receive necessary insurance coverage without incurring additional tax liabilities. Illustration: Queensdale Company made the following insurance premium payment during a calendar year: 30,000 premium for the life insurance of the Chief Executive Officer (CEO) with Queensdale Company as the beneficiary of the policy. 20,000 premium for the life insurance of the company Chief Operating Officer (COO) with his wife as the beneficiary. 15,000 insurance premium of the personal car of the company manager. 40,000 premium for group insurance of employees. 80,000 premium share SSS, PhilHealth, and Pag-ibig dues of employees. 10,000 fire insurance premium for the company bill. As you can see, the illustration, the 30,000 premium on 10,000 fire insurance is accepted because the beneficiary is also the company and consider po siya as a business expense. Meanwhile, the 40,000 and 80,000 is exempted. Why? Because it is allowed or provided by the law. Also, among these payments, the premiums for group insurance of employees and the contribution to SSS, PhilHealth, and Pag-ibig dues of employees are exempted from taxation as they fall under the exemption for taxable fringe benefits. The premiums for the CEO's life insurance, CEO's life insurance, personal car insurance of the manager, and fire insurance for the company building may be subject to taxation if they exceed the limit set by the law. Quarterly monetary value of fringe benefits shall be computed as follows. So, life insurance premium of CEO where his wife is beneficiary is 20,000. Car insurance of company manager is 15,000. Quarterly monetary value is 35,000. So, the quarterly monetary value of fringe benefits is calculated by adding together the life insurance premium of CEO, where his wife is the beneficiary, and the car insurance of the company manager. The total quarterly monetary value of fringe benefits is 35,000. So, diri na ta sa French benefit tax rates. The French benefit tax rates as follow. Muna siya ang year 1998, 1999, 2000 to 2007. And employees, resident or citizens. Ano siya? 34%, 33%, 32, 35. Ang iyang non-resident alien is 25%. So these rates determine the percentage of fringe benefits subject to taxation based on the specific year and the residency status of the individual. Next is gross up monetary value. So the gross up monetary value is the monetary value of benefits divided by the appropriate gross up rate. For the employee, the gross up monetary value is inclusive of the fringe benefit. The following are the gross up rate. Gross up monetary value is also adjusted value, includes the fringe benefit tax, providing a comprehensive assessment of the total value of benefits for taxation purpose. And also these rates in the box, as you can see, is determine the adjusted value of benefits for taxation purposes, accounting for the fringe benefit tax. Illustration: assume an employer grants fringe benefits when monetary value of 58,500 pesos to a resident citizen managerial employee. So the gross up monetary value is computed as 58,500 divide 65% is equals to 90,000 pesos. If the employee is a non-resident alien, the gross up monetary value shall be computed as 58,000 divide 75%, it is equals 78,000. French benefit tax computation. Station 1, resident citizen. So in the last of 2019, Alexander, a Filipino supervisor employee, was given 13,000 worth of groceries for personal use. So, mano siya ang formula. Monetary value is 13,000 divided by gross up rate 65%, gross up monetary value 20,000. Multiply by French benefit tax rate 35%, French benefit tax equals to 7,000. Therefore, the French benefit tax payable by Alexander, a Filipino supervisor employee, for the groceries received is 7,000 based on the provided values and tax rate. Illustration for resident alien. An offshore banking unit OBU reimbursed the following personal expenses of its managerial employee during a calendar quarter. The golf club membership dues 100% in the name of the employee. Groceries 50% in the of employer is 24,000. Homeowners association dues is 5,000. Total 39,000. The French benefits tax shall be computed as 39,000 times 35% divide 65% is equals to 21,000. Illustration 2. Non-resident alien. On January 2014, Cyberspace Company purchased a 3 million car and designated it for the personal use of its non-resident alien executive. Monetary value 3 million divide 5 times 50% is equals to 300,000. Quarterly monetary value 300,000 divide 4 is equals to 75,000. The French benefit tax shall be computed as 75,000 times 25,000 divide 75,000 equals 25,000. These calculations demonstrations how French benefit tax is determined for resident aliens and non-resident aliens based on the provided monetary values and tax rates. Accounting entries shall be classified as follows. Number 1 is taxable benefits paid for in cash or in kind. Nakita ninyo, ang for, isa ra siya guys na malig time. Second is taxable benefits which do not involve payment of cash or transfer of property. Third is exempt benefits paid for in cash or in kind. Fourth is exempt benefits which do not involve payment of cash or transfer of a property. So for number one, this increase involve recording fringe benefits that are subject to taxation and are provided through cash payments or the provision of goods or services. Number two, this category includes increase for fringe benefits that are taxable but do not involve direct cash payment or asset transfer. Third, these increase relate to fringe benefits that are not subject to taxation and are given to employees through cash payment or in-kind benefit. Last is, this classification covers entries for fringe benefits that are exempt from taxation and do not involve direct cash payments or asset transfers. Proceed na ta sa benefits paid for in cash or in kind. So, illustration 1, rental accommodation. Plato Corporation paid 91,000 pesos for the rental of a housing unit for the use of its president. So, yung French benefit expense is 91,000. French benefit tax expense 24,500. Ang cash is 91,000 pesos. Fringe benefit tax payable 24,500. The French benefit tax 91,000 times 50% times 35% divide 65%. The result is 24,500. Illustration 2, transfer of ownership over properties. Aristotle Company transferred ownership over a newly acquired investment property quoting 1,200,000 pesos as residence of its supervisory employee. The property has a zonal value of 1,300,000. French benefit expense is 1,200,000. French benefit tax expense is 1,300,000 times 35% divide 65% is equals to 700,000. Ang investment property is 1,200,000. French benefit tax payable is 700,000. Illustration 2, to calculate the French benefit tax expense, the zonal value of the property, which is 1,300,000, is multiplied by the tax rate of 35% and divided by 65%. So the investment property is recorded at a value of 1,200,000 and the French benefit tax payable is also recorded. Proceed na sa benefits which do not involve payment of cash or properties. For illustration 1, free usage of assets. So, Homer Realty Incorporated designated a unit of its condominium property for the use of its vice president for finance as his family residence. The rental value of the unit for the past calendar quarter would have been 260,000. So, yung French benefit tax expenses is 70,000. French benefit tax payable is 70,000. So, ang French benefit tax is 260,000 times 50% times 35% is divided to 65% is equals to 70,000. So, this illustration demonstrates how companies account for French benefit and the corresponding tax obligation when there is no cash or property payment involved. Illustration 2, interest-free loan. So, through deal, an oil exploration company granted a 1 million interest-free loan to a non-resident managerial employee. So the following entry shall be made every quarter after the loan issue. So ang French benefit tax expense is 10,000, French benefit tax payable 10,000. So ang French benefit tax is 1 million times 12% divide 4 times 25% divide 75% is equals to 10,000. So in this illustration 2, the company is required to record the French benefit tax expense and the French benefit tax payable every quarter. So the French benefit, the expense is calculated by multiplying 12% of the loan amount by the tax rate of 25% and dividing by 75%. The same amount is recorded as the French benefit tax payable. Next is exempt benefits paid for in cash or in kind. Illustration, exempt French benefits. An employer paid to 120,000 for the tuition fee of his supervisor is taking an advancement course in furtherance of the employer's business. French benefit expense is 120,000. Ang iyang cash is 120,000. So, exempt benefit paid for in cash or in kind when employers provide exempt French benefit in the form of cash or property. So, the 120,000 is recorded as the French benefit expense and the same amount is recorded as cash given. So, this illustration highlight the accounting treatment for interest-free loans and exempt French benefit, ensuring compliance with the applicable benefit tax regulation. Exempt benefit which do not involve transfer of cash or property. So, illustration, exempt free use of property. So, Felix is allowing its plant manager to use a residential property nearby is processing plant to ensure the manager's close monitoring of the production process. The rental value of the property is 40,000 a month. So, this illustration, since this benefit do not involve the transfer of a cash or property, it falls under the category of exempt benefits. Therefore, no specific accounting entries are required for this scenario. Integrated Illustration 1. Highland Miners Marketing Cooperative HMMC furnish its managerial employees a car plan wherein HMMC will purchase cars of their choice worth 1,300,000. 40% of the purchase price will be deductible against future salaries of the employee. HMMC purchase a car for its sales manager. Advance of officers. 1,300,000 times 40% is equals to 520,000. French benefit expense is 1,300,000 times 60% is 780,000. Then French benefit tax expense 780,000 times 35% divided by 65% is equals to 420,000. Cash is 1,300,000 and French benefit tax payable is 420,000. So, the illustration demonstrates how exempt benefits that do not involve the transfer of cash or property are accounted for, as well as accounting to managerial employees. Integrated Illustration 2. Marco Realty Corporation transferred ownership over one of its residential property inventories to its vice president of consideration 450,000 pesos. Property was acquired for 2 million but has a fair value of 2,400,000 pesos at date of transfer. The fringe benefits expense shall be measured at the actual cost of the property given by the employer, but the fringe benefit tax shall be measured at the monetary value of benefit 2,400,000 fair value minus 450,000 received. Cash 450,000. Fringe benefit expense 1,550,000. Fringe benefit tax expense 1,050,000. Inventory 2 million. Fringe benefit tax payable 1,050,000. 2,400,000 minus 450,000 times 35% divide 65% is equals to 1,050,000. So the cash payment made by the vice president for the property, which is 450,000, is recorded. The, the fringe benefit expense is measured at the actual cost of the property given by the employer, which is 1,550,000 is 2 million minus 450,000. The fringe benefit tax expense is calculated based on the monetary value of the benefit, which is the fair value of the property received. 2,400,000 minus the consideration paid 450,000, so the result is 150,000. So sa residential property inventory transferred is recorded at its original cost of 2 million. So the fringe benefit tax payable is calculated based on the difference between the fair value of the property received 2,400,000 and the consideration paid is 450,000 pesos multiplied by the tax rate of 35% and divided by 65%. The result is 1,050,000. The last is tax treatment of the total fringe benefit expenses. So the total fringe benefit expense, including the fringe benefit tax expense, is a deductible expense of the employer against his gross income in the computation of his taxable income. It must be noted that a deductible fringe benefit expense exists only when benefit is paid in cash or in kind. The expense is measured at the actual cost of tax basis of consideration given as fringe benefit. It is important to note that this deductible expense exists only when the benefit is paid in cash or in kind. So this tax treatment allows employers to account for fringe benefits as deductible expense, reducing their taxable income and potential lowering their tax liabilities.